what's happened is they had a plan to go in and take out all of these countries and change the regime and so forth, and they're all in the Middle East. And it was obviously we know about Iraq and Afghanistan. Anyway, Syria is the one they're trying to deal with right now, and obviously it doesn't help the fact that Putin's there with his army. So Assad, and again, I'm getting the information that I have available. And I don't believe that the information that's readily available is the correct information. But if you dig a bit deeper, you can find more. But they want to destabilize the Middle East. It's to do with oil control. And I think it's Israel and the Saudis or something. They want to control the oil, and they've got to take out, or not take out, but take out, not take out the country, but take out the leaders and put their own leader in there so they can get these deals for oil and stuff like that. So if you follow the trail back to oil, there's something going on with oil, and about they'll increase the prices somehow. Now the Saudis, I believe, can still profit at something like $20 a barrel. So when the price dropped, we saw the price drop heavily at one point. I think it was it WTI? You got WTI and you got crude. So WTI is the US and crude is the UK. I think it was WTI that went down to $22 or something. This was a few years ago. And then we saw what that did is it pushed some other oil companies out of business because they couldn't survive. That was their thing. We can't survive. And the Saudis could survive long enough to push these guys out. But I think it's something to do with oil that's going on there. So during times like this, you can get a lot of volatility in oil. So when you hear guys say, I just trade oil, just trade oil, just trade oil, there's volatility there. And there is actually a pretty simple and straightforward supply and demand story as well. And you've got to really take that into consideration as well. Yeah. But this is worth looking at. It's in the chat. It's worth listening to what he says, and he explains what the plan was, because Iran's going to be the next one. And now, if you have a look, you can see that there is tension there. Well, I say tension, more tension there now with regards to it. So the US is laying out new demands, and they're a bit of a bully, the US. So look, and if you look at the wording. Washington, the Trump administration put Iran on notice that any new deal would require it to stop enriching in uranium and halt its support for militant groups in the region, sweeping demands that Tehran swiftly rejected. So basically turned around and said, like, do one, mate. We ain't interested. Do you see what I mean? So, with the world at large, anyway, there's always it's like a fight for power. If you look back at the Romans, the Greeks, the Egyptians, and how these things have always happened and come to pass. Even if you look at the British Empire, it's not anymore, but at one point it was an empire. I would say now, even if you look at actually something else that you guys it's worth looking at is having a look at corporations and how they're set up. Even though we're trading FX, we are effectively trading corporations. Whether you guys know this or not, the US and the UK and all these countries, they're actually registered corporations. That's why they have a president and a secretary and stuff like that. Do you see what I mean? Because we have a prime minister, but we also have a secretary as well. So the reason why these things are there is because it's a corporate setup. Yeah. That's why these corporations, when you talk about things like Starbucks and so forth and not paying taxes, or you're actually talking about a smaller version of like what these economies are. So you want to understand a bit about companies so you can understand a little bit about how these guys are making their maneuvers going forward as well, because there is an underlying reason behind it, right? So when I said to you beforehand, sometimes I like to look at conspiracy sites, it's just because some of the news they give you is different to the news you get in the mainstream. If you look at the mainstream, some of the news that's out there, it's generic. It's across the board. Typically, I'm sure you guys have seen this, where they show the different people from news channels all saying the exact same thing, which shows it's scripted, basically. So that's why it's good to get away from the scripted and look at other things and see what else is going on there as well. Yeah. So it's worth doing that. Let's go back to the calendar, because the rest of the week actually does look quite interesting. So we've got Carney speaking at 9 a.m. Bang, this is going to be perfect for your London Open strategies and trades. And anything you trade during that time. Remember, during the London Open, you don't have to trade the breakout if you don't want to. You can trade supply and demand. You can trade Bollinger Bands. You just need the volatility. When you've got that added volatility, your trades will work a lot better. Right? So do remember that your setups will work a lot better. Yeah. And then at halftime, we've got retail sales. So that should be quite good. As well. It should be very good, actually, considering what Monday was like as well, specifically. And then you've got at 12:30 you got ECB monetary policy accounts. Now I don't think that they're going to report anything good for the euro. It's not looking that great. I think Italy's in huge trouble right now as well. So a lot of the countries in the eurozone are in huge trouble. The currency has gained some strength considering what it's done over the last couple of years when everybody thought it was going to collapse, and it seems to still be going strong, right? Um, but at the same time, their books aren't well balanced. So with all the holes in their accounting and so forth, or say holes in their account, more like with all the debt they've got and deficit they've got that's not being paid back, and we saw what happened to Greece there as well. I can't imagine that's going to be great for the ECB when they're going to talk about accounts. But always good to click here and just to get always remember to do this as well. Yeah, so I can't see it being more hawkish. But then what could they say that can make it a bit more hawkish? I'll tell you what it's going to be. It's going to be things like, they're going to stop printing money. They're going to look to raise rates and stuff like that. I doubt they're going to do any of that this time soon. But even a hint towards is optimistic. So when everything's bad and you get a ray of sunshine, how small it may be will still lift your spirits slightly, right? So it's the same thing here. So even if you're listening and he says, things have improved, and his tone as well says it more than anything else, then the general consensus is going to be to buy the euro. And if you buy the euro, typically selling the dollar, right? Typically. So, and obviously you can see here a bit more about it. And it's good to do that just to keep seeing it. And then Friday looks nice, very interesting. We've got our news coming out for the British pound, which is going to be good again for the opens. And then look how Friday finishes up. We've got US news coming out at 1:30. Carney speaks at 2:30. And then we've got Powell speaking as well, 2:30 at 2:20, sorry. So expect volatility. What's your currency pairs? Pound dollar, euro dollar. Yeah, look at those two pairs, cheapest to trade, tight spreads. Look at those two pairs there. They're good. These ones are going to set up for great opportunities. Yeah. So it's a good week ahead in terms of news announcements. Back to looking here at the charts, and I'm not planning to go through and saying to you guys, look, let's find a trade here, let's find a trade there, and so forth. I'm not sure exactly what you guys are all trading right now at this moment in time in terms of strategy. Some of you trade supply and demand, some of you want Bollinger Bands, some of you couple the two together, some of you will use MFI of it instead, some of you would just use the bands, some of you just trade the breakouts. Nothing wrong with any of those strategies. Yeah, nothing wrong at all. It's all about having your own opinion and so forth. So we'll be looking at British pound. So British pound, look, we can see here, yeah, as the time's coming up, it's 1 o'clock now. So you can see here some consolidation, yeah? What does that tell you? Right now, if you was looking at the markets and you see some consolidation, what would that tell you? What do you guys think? Well, think about the time. Yeah, so what happens at this time? The US markets are starting to break out. Yeah, so US, let's look at the US, New York. Where is it? US Open. No, that can't be it. Is that it there? Yeah, so it hasn't started forming yet for some reason. It hasn't started forming yet. Wait. Just check what's going on here these times. No. 3, which is 1. So it should have formed by now. Right there. New York, US. I don't have all my templates here on this machine. Right, so for some reason it's not forming. I have to find the other one that I've got actually. Let me just find the other one for you guys. Open. Alright, cool. Got a nice break. There. All right, cool. There it is. Do you see the consolidation? Now, if I do this and go here, and I do, okay, where is it? True. Okay, cool. Right, so if I do true, you can see it's 17.5 pip range on cable. So that's good. Good for breakout. Yeah. So it's very good for breakout actually. So euro dollar forming for breakout. It looks like the range is a little bit wider. Let me move this thing out of the way. I don't think you guys can see this, but this go-to meeting thing's in the way. Yeah, lunch is 12 to 1, Patrick. When you say 12 to 1, I don't know. Is that question to me or or someone else? Range is a bit wider, 25 pips, say. So I think you need 15 minutes for it to close out on this 15-minute time frame. Is it? Let me just check. No, actually, it should be closed now. Yeah, so it should be good on the range. So you should get a breakout here. Now, what I'd be looking to do is on this. Now, you can do this two ways. Yeah, so it depends on what you're using. So we've got this up here. I'm going to save this quickly. Save this template for you. Or for me, should I say. US Open. All right, coolio. So if we do now, if we go supply and demand, for example. Yeah. Right, so do you see how you actually, I mean, you didn't need the supply and demand levels to see that if you went back to a blank template, because what you had as a heads up was where the markets come up to here, right? So, do you see this? So what I was going to say is I'd be looking to sell it further in the range if it doesn't break out of the range that's here, right? If it was to break above this, then I would look to buy it. And I would expect it to do some kind of a retest as well. So a lot of times, if it does happen, it will retest as well. So I'll show you what I mean. So if it does that, it has to be the wrong color, doesn't it? Yeah, that's right, Patrick. Yes, sorry, mate. So it pushes up and then comes down into this level and then rallies off. That's typically what you'd expect on that kind of thing. I don't know why this text thing isn't holding. Weird, isn't it? I don't know why that's not drawing constantly as it is. Obviously, you wouldn't want to jump in and sell it after it's made this big move, but as part of a breakout, that's different. So back to our US Open template. Boom. Where's it gone now? No, it must be the wrong one. I'm sure I just saved it. Here we go. This one. Yeah, cool. Perfect. So you see here, if this thing pops back up, I would expect one or two things to happen. Yeah, just based on looking at price and how price maneuvers, I'd expect if this thing doesn't break to the downside and keep going, forget the moving averages there. Doesn't matter that much, to be honest with you. Or if it comes up, it could be looking to come up to here to then sell off. If it breaks through, then I expect it to push up, retest, and then keep going. That's what I would expect to do. So you form a plan and then you trade that plan, but you should see volatility start to kick in pretty shortly. So is there anything that you guys want me to cover or go over at all? The box hasn't completely formed yet. So I think we need this 15 minutes to close before that's actually completely formed. There, it's completely formed in the 5 minutes. You see that? So it's broken through. Yeah. So it's broken through there. That's a bit of a rangy market, but if this breaks now, as it has done, if that stays in the next 5 minutes, that the close, yeah, it's pushed, it's gone. Nice. bit late to get in now, but it's there. But that means there's going to be others setting up as well, and you see a follow suit. Watch. So cable will be a good one for you guys there. So what you do is, I'd be looking down here, 2 bits below here. Okay. Keeps asking me the same thing. Okay, so sell stop, place, see how far down that is. Alright, so you'd expect it to follow. I'd expect it to follow. I'd expect it to follow the euro. Yeah. Seeing what the euro is doing. Okay, follow the euro. Now, if this thing pops back up, you expect cable to follow it. Yeah, to a certain degree, and then you look for the same kind of entry. So dollar should be pushing up. No. It's dollar yen. Right, I've got a trade in place in dollar yen. Cool. Just check something quickly. Perfect. Okay, cool. Perfect. Right, so you can see here the range. Actually, it's out the screen. You can't see it. We can measure it. See what the range is like. 20 pips, not bad at all. Dollar CAD. See dollar pushing up. That dollar strength is going to add to that pound strength. To that pound push down. You're going to see it. Then Aussie dollar. Remember, Aussie dollar moves with pound and euro and so forth. Pound dollar, Aussie dollar, euro dollar. So I expect that thing to break to the downside and start pushing down. And then we'll see what happens with that and how that follows through. All right, so Bollinger Bands. Let's bring it back up. Bollinger Bands. All right, so how would I use the Bollinger Bands? So with the Bollinger Bands, based on how you're trading, Patrick, yeah, all right, it doesn't matter. As long as it hits the band, you can get in and out. It doesn't really matter. But if you're just looking to go one way, now the Bollinger Bands, we use them, to revert back to the mean, to trade back to the average. But in this instance, think about breakouts and so forth, and how Bollinger Bands are used for breakouts. So I'd use it as a breakout indicator. Let it push down. If it pushes to break through, then that's going to be in line with your Bollinger Bands also. You know, Bollinger Bands are used for both breakouts and mean reversion, yeah? So you can trade them as... You can trade them back to the average, back, or you can trade the breakout, yeah? And you find the breakouts. The breakouts give you bigger moves, so it depends how you want to trade. For some of you guys, like you, Patrick, where we're working quite closely together, you should see that whichever way you go, you don't really care that much, yeah? You're just looking to take your entries, and that's it. You take your same entries consistently all the time. Now, if you're trading the Bollinger Bands and using the Bollinger Bands, you do want to learn a bit about the Bollinger Bands. You know, John Bollinger, I mean, you might as well know as much as you can about them. It's only going to help you, yeah? So there's a guy called John Bollinger. If I Google him for you. John Bollinger. That's him. That's John Bollinger, right? That's him there. So he's got his own official website and so forth, which he should have. And I mean, if you look at this one, if you see this video here, John Bollinger is really good, by the way. Yeah. And you'd expect that also. But I mean, this video here goes into using Bollinger Bands. So stuff like this also is good for you, yeah, to look at, to understand all the little bits and different pieces that you're using. You may as well. So I can send you that as a link if you guys want. So we're not going to use that right now, but I'll put this link here for you guys if you want to watch a video on John Bollinger. It's quite long, say 1 hour typically. A lot of these technical videos can get quite boring. It's easy to fall asleep when you're especially if you're tired and you're sitting and you're watching it, taking the information in. So when you guys study something, yeah, you want to learn something, I'm going to give you something that you should play in the background that's going to help you, yeah. It's going to help you guys to learn. It's going to help you guys to learn to to take in information and retain it much easier, yeah? And it's called Baroque classical music. Baroque classical music. Okay. I'm going to send you guys that link as well. Okay, cool. So that's that link. I posted that as well in the group. So what that does, it allows you to enhance your learning, yeah? So if you want to see how it's spelled, Baroque, Baroque music. Yeah, I thought you would say that, you know. I knew you'd have it, Patrick. So what you do is play in the background. You don't have it loud or anything. Just have it low so you can hear what else you want to listen to, right? But what it does do, it does it. So the way it works within your mind is it awakens certain parts. It allows you to retain information, to remember it better, and stuff like that, and so forth. So it does do all that for you. Yeah, it does help you enhance it like that. So it's good to have that. And everybody knows classical music is good for the brain as well. And it's the hertz as well that it plays at. So I don't know if you guys know about hertz, but Nikola Tesla spoke about 369, and there's a 369 hertz. And the music that we listen to is of a different hertz, and therefore it's quite like pop music is quite trancing. Yeah. And what it does is it's not makes you stupid, but what it does is it supposedly kind of dumbs down and sends your energy into your lower chakras. Yeah, and it might sound weird to talk about this in the trading room, but sends your energy down to your lowest chakras, and to be able to trade, you want to be balanced as well. Your lowest chakras is all about your survival instincts, and you don't want to be trading survival instincts. Do you understand me? You want to be trading more on the higher chakras. If you guys don't know anything about chakra system, I suggest you look into it because it's how your body works. Yeah. What happens is you don't want to be in the lower chakra, which is your base chakra, because that's about survival. Yeah, that's your animalistic side. So I don't know if you guys know we've got three brains. So really quickly, let's wrap this up a bit of psychology then. Yeah. So you got three brains. Yeah. And the three brains that they say that you have is you have your reptilian brain, you have your your logical brain, and then you have like your emotional one. Yeah. And what it is, it's like supposedly it's a story of evolution, how we've evolved, from being just about trying to kill our food and battle the monsters to survive, to being able to create and build stuff as we have been doing. But a lot of us reside in our lowest chakras. Now, if you in our reptilian brain, yeah, I can't what they call it, the amygdala or something. Anyway. The point is, it's like with the reptilian brain and the way that it works, if you think about a reptile in itself, reptiles eat their young. Yeah, they're all about survival. Yeah, so it's almost like they don't have a heart kind of thing, whereas we do. That type of thing. Yeah, so how we function is different to these to not animals in general, but some of us like animals most of the time, but to the reptilians themselves are different. Like a dog or a cat doesn't eat its young, but a reptile will. Yeah. And they live in different circumstances, different conditions and things like that and so forth, right? This is a nuclear war. It's probably only reptiles that will survive as well. Probably why David Icke keeps talking about them. Anyway, so with psychology, what you want to do is you want to have as much support in your psychology as not. Yeah. So remember I told you beforehand, when you make decisions, it's all to do with the chemicals in your brain. You think about something, the chemicals create a reaction. So it means you can change it. You can change when you're feeling bad, if you're feeling uncertain, if you're feeling low and stuff like that. Yeah. You can change these things. You can make these adjustments, which is key. It's important. So your psychology is just based upon how you think consistently. Yeah. And if you're unsure, you make rash decisions. So obviously you want to be as sure as possible in a decision that you make. And what's the way to be sure? So when it comes to this, for example, one of the ways is like the video I just sent you. If you don't have to watch that video, but just to do a bit of research on anything that you use, outside of what we teach you. It doesn't mean that you go somewhere else, you see some other information, be like, oh, they told me this and they said something completely different and so forth. It just means you're trying to get an understanding of all sides of it, not of who's right and who's wrong. You're not ever going to get an instruction booklet that says you only do this and this is always going to happen. Same with indicators. Indicators have killed many accounts because they're only an indication. People like to see them like they're more than an indication. Like, no, look, my Matt D said the market's going up. It's going up. And it's like, well, if the MACD is going up, it's because the price is going up. You see, so that's where it works off of. Yeah. Same with moving average. Yeah. It works off the average price. If on the whole the market's going down, the average price will be going down as well, and vice versa. So the indicators have to work in line with that as well. Yeah. So when you make your decisions, when it comes to your trading and so forth, if you do enough research, you're going to be confident, or enough learning, you're going to be confident. If you use it enough, you're going to be confident. So you always want to do that. Yeah. So again, with the Bollinger Bands, during the times that we have news announcements, or we have opens, or any time of added volatility in the market, the Bollinger Band is going to work great for you. Just here now off the middle band, you could trade that, sell that, and quite a few of you guys in the room that are here now are trading the same strategy of me, and you're hedging yourself out of positions when it comes to this. So you're going to get the certainty of the fill anyway. It doesn't really matter. So just now, for example, let's say you would have sold it with a breakout. So if you'd have sold it with a breakout, and you can see that thing's made like an 8-pip move. The only thing it's going to do is going to come up, collect your next order, and sell off then, if that's the case. You're still going to be in profit. You're still going to make your money off the back of it. And you'll still also get the breakout trade off the back of it as well, because the breakout could be to the in or to the out. Could be to up or to the down. It could be either way. That's when they say, are you going to trade or fade? And you see these videos say, let me show you how to know when a breakout isn't going to work. Why? Do they have a crystal ball? Does somebody pulling out a crystal ball, putting it down and saying like, okay, my crystal ball tells me? No. Nobody really knows. So that's why you have a plan of action or a plan of attack. You see, like, I don't know, do you guys play chess or anything like that? Chess is a good game. You can't play chess and not think 2 or 3 steps ahead, right? If you guys don't play chess, I'm going to show you something, right? And if you do play chess and you're not playing like this, then you should also play like this as well, yeah? So I know people like to play things like Candy Crush and stuff, but when you look at a chessboard, for example, let's see if there's an image of a chessboard here where the pieces have been moved and they're somewhere in the middle of the board. Right, okay, cool. So look, so see here now, if we look at this image, yeah, you guys can see this image, yeah? Now, if you look here, he's going to move, if you don't know about chess, it doesn't matter, right? He's going to move what's called his knight right now. And his knight can only move in an L shape and can jump over certain pieces. But before he can move that piece, in his head, he's got to think 2 or 3 steps ahead of what could happen next. He's got to say, right, where I can move this is where he can actually, this might be an easier way to do this. Because of how that writing tool is working at the moment. For some reason, it just doesn't want to write, or I don't know what it wants to or doesn't want to do. Right, so copy. Cool. Right, so if you have a look here, now where can he move this to? So he can move this like this. He can move it like this. He can move it like this. He can move it like this and take this piece here, right? But whatever he moves it to, yeah, he can't move it here because there's a piece there. He can move it here and so forth. He can move it here and he can move it here and take this and so forth, yeah? So these are moves that he can do, yeah? So let's say that he decides, okay, what I'm going to do is I'm going to move my piece, say, here and here, and he's going to put it on top of this piece here and take this pawn, for example. If he doesn't think ahead of what can happen next, he's going to lose his knight, because he'll put it here, and this guy's going to simply take it with his castle. But even before he takes it with his castle, even though it's certified, knows he can take it. Even if he's played it out in his mind, if he moves his knight to h7, then I'll be able to take him. I'll take him with my castle. h8 to h7 takes the knight, yeah? So, but before he does that, the opponent, he's still going to think to himself, wait a minute, what don't I see? If I move this to here, can he take me? What can attack me? What can attack me from here? What can attack me from here? Because nothing can attack him here at the moment. Do you see what I mean? Same way if this guy now decided, okay, well, look, what am I going to move in terms of my pieces? and he decides that he's going to move, for example, this here, well, that's attacking his king, so he can't do it. Do you understand me? Yeah. But at the same time, yeah, if he wants to make a maneuver and he says, okay, well, look, I want to bring my queen out. Now his queen moves in diagonally or horizontally as many spaces as it wants. He can go here, he can go here, he can go here, and he can go here, and nothing's going to take him. Yeah. But at the same time, before he moves it, he doesn't just say, well, nothing's going to take me, it's fine. If he moves it, he's going to think to himself, let's say, for example, he just decides to come here now to start attacking, so he can look to attack the king of the opponent. Well, then he still needs to consider, if he moves it up here, moves his queen here, what's he likely to do, his opponent? So more than likely, his opponent's going to come here and move a pawn up to block the queen. Well, then, if he does that, he can take the pawn, but then he can get taken also by the other pawn, right? So this is. I hope you guys get the gist of this. I'm just saying, like, if you're playing chess, you've got to think a few moves ahead. If you're trading, you kind of want to do the same thing as well. So I've given you guys certain strategies like that. That's all I've done with you guys, is done that with you. That's it. That's all I've done with you guys, is I've done that with you. Yeah. Look to give you certain. I've looked to give you as much tools as possible, so you got each ground covered. So for those guys that are working with me, that are hedging, yeah, I know it's not for everybody. For those of you that it is for and that we're doing it together, yeah, you guys are saying, okay, well, look, I know it's going to be the US is opening up right now, trading pound dollar. I've seen the euro and Aussie pop down. I'm expecting it to follow suit and push down as well, right? So I'm looking to get in and trade it and set it at this level here, right? But should it go against me at this point here, I'm going to look to hedge my way out of the position and take it as a reversal. If it goes down again, I know it's finally going to break out. Bang, I can get another position here and go with it. Yeah. You understand? Yeah, excellent, great, perfect. So it's not like it's rocket science, because it's not rocket science. When people say, oh, it's not rocket science, I remember the first time when I had this conversation about rocket science with a trader years and years and years and years and years ago, and I remember, like, he said something, he said, like, it's not rocket science. So yeah, I know, and he goes, no, let's just think about it. What is rocket science? So it's something that's completely different. All right, so it's not rocket science. If you wanted to learn rocket science, it's something completely different and much more in depth that you're looking to learn than it is with something like this. Yeah, so it's not rocket science. There is logic to it, but you can't ignore there's emotion as well, because you put your money in the line, there's going to be emotion there. Yeah. And this is why people say things like, oh, I took 100 pips out of this and I make 100 pips a day and so forth. What you can do that. A lot of people can't hold the markets for that long. Yeah, I don't know if you guys were in the room when I traded the euro, and I sold the euro quite heavily. Do you guys remember that? And I just kept selling it all day as it was tanking, and it must have fell off about 80, 90 pips, probably more than that. Do you guys remember that, on the back of like options expiry? Yeah. So with that, because I had quite a lot of things there telling me the same thing, when the market pulled back up, I didn't get out of the position. I stayed in it. You didn't see me adjust my stop so quickly and stuff like that. Why? Because I had a plan of attack based upon what was going on, yeah, and also based upon what could happen next as well. Just like with the chess game, so you do the exact same thing. I knew the position could reverse, but at the same time, I knew it had more potential to keep going because everything was so negative as well for the euro. So actually, it made more sense not to adjust my stop loss so quick. Because remember, and you guys got to remember this as well. This is a key thing I want you to remember. And I'm not saying that you guys in the room specifically do this, but I've heard this from various different sources as well. If you take a trade and you get stopped out at break even, it tanks 100 pips. You haven't lost 100 pips. You haven't lost anything. You can't lose what you never had. Yeah. So you don't lose anything. That's an important thing to look at. Yeah. You don't lose anything. If the market doesn't move in your favor, or you got stopped out at break even, you haven't lost. If you get stopped out for 10 pip loss, now you've lost something. Yeah. If you get stopped out for a gain of 20 pips and the market tanks 100, you can't sit there and say, oh, I've lost 80 pips because I moved my stop loss. You didn't do that. You didn't know what was going to happen next. Like the chess game, exact same thing. You don't know what's going to happen next. What you need to do is prepare as much as possible. Yeah. So you can't know every single move your opponent's going to make, but you can know, actually, if I move, for example, if I'm moving this piece here now, and I decide to put it here, well, then this going to now create an opportunity for That's right. You don't know what you don't know. Exactly, Patrick. Right. So when you don't know what you don't know, that's perfect. Patrick just said you don't know what you don't know. I want you guys to see this, right? Do you guys know René Descartes? Have you heard of René Descartes? French philosopher, yeah? And he had this quote on probability. Right, quotes probability. Where is it? Okay. Okay. When it is not in our, something like that. Anyway, basically, he says, you guys have got to look it up for yourself because otherwise it'll take too long. But René Descartes basically says, when it's not in our power to know what is, we have to go with what is probable. Yeah, and that's trading. So you don't know what you don't know. You don't know what's going to happen next. So you're constantly going with probabilities. You know, if you've got probabilities in your favor, yeah, and you continue with probabilities, do you know that you'll come out on top? Because that's probable outcomes, probabilities. Yeah, we did a Monty Hall. We'll probably do it tomorrow. Talk a bit more about probabilities, so you guys can understand making highly probable decisions. That means you don't need to know what's going to happen next. You need to know what the circumstances are setting up for. Yeah. So why don't you turn around to somebody? You know, sometimes you're in the store. Yeah, you're looking to buy something in a shop. You're in Sainsbury's maybe, and the person's bought their stuff and they want to chit chat to the cashier, and you might be thinking to yourself like, oh, "Come on, hurry up! I just want to get my stuff and get out of here." You don't turn around to the person and say, "Excuse me." Some of you might do. You don't turn around and say, "Look, come on, hurry up, would you? Move out of the way. I want to get my stuff." You old crow, right? The reason why you don't say that is because it's more than highly probable that it's gonna hurt the person's feelings and it's gonna create some kind of animosity and a tense situation. You with me? That's why you don't do that. So it's the same with most things, like in that same sense, yeah. In that same sense with most things, excuse me. What you find is that we don't always know what's going to happen next, so we go probability. So probability says that probability says like, actually, I'm going to do what's going to give me the best possible outcome. So, for example, you know, if you want to get past someone, you say, "Excuse me," yeah, because the probability says they're going to move out your way, and you can just get on with your day. But if you turn around and say "move," the probability is they're going to take offense to it. You know, and it might turn into a physical confrontation unnecessarily. Yeah, probability in that way is in everything in life. When we don't know, we don't know. We go with what is probable. Yeah, and what is probable is more of what we do know in that sense. So always trade a probability in that sense. So again, it's the same thing. You know, you're trading that's why we trade during these announcements. It's all for probability. Why did we go with the pound instead of the euro? It was more highly probable we're going to get more volatility out of it, which turns out we didn't, but the probability was in our favor there, so we went with the probability. Make sense? Cool. So look, what we'll do, if you guys got no more questions, we'll wrap up here. I'll be around for the rest of the day. If you guys need anything, give me a call. And if I see any opportunities, then I'll let you know. What I'll say is you want to take advantage of volatility you see during the London session, because that's going to be good for you. During the US Open, it's going to be good for you. US markets open officially in an hour's time as well. So even if it doesn't move so quick now, you still expect you're going to get that break regardless, yeah? But we'll see how it goes. So look, guys, thanks for being here today. What we'll do is we'll cut it there, and we're back tomorrow. And then, like I say, if you need anything, give me a call. Thanks for being here, guys. Speak to you soon. Bye now.